Good morning, happy Wednesday, and wonderful morning or evening or afternoon or night, wherever you are. So how are you doing, guys? Please give me some okay that you can hear me and you can see our screen. Our screen. Why our screen? Since when am I talking to myself? Like our. You see my screen. Wonderful. So we have Mr. Market moving, and it's good. It's good for us. It's good in our direction. Thank you very much, Peng. But my birthday is tomorrow, guys. I saw now before the live room. I saw in the group the birthday wishes, but it's tomorrow. But so thank you in advance, guys. You don't need to repeat. Early wishes is the best. Like Toxman said, that's whole week celebration, right? Well, I wish. But the market is moving and paying, and that's a real celebration, which is great. So by the way, guys, I hope you had a chance to watch yesterday's webinar, the multi-time frame divergence trading concept. And I would like to thank those of you who watched and already sent feedback. It's amazing. Thank you very much for that, guys. I'm really thrilled. I didn't see that coming so well, but I'm glad you understand correctly. So well done. I even have already comments from traders who look. That's James. James, are you here by any chance? I just want to share. Let me check if you're here with us. James. Are you here, James? I see James here. And that's the trades he shared according to that setup, which I will also discuss about. And beautiful, really well done, guys. When I see that from you, it's music to my ears, and boost to my satisfaction from your performance. Well done. So if you didn't watch, just go to the media zone. It's right there, multi-time frame divergences, uploaded yesterday, a new webinar, or in the Telegram group which we have here, the updates. Where is that? Here. Okay, so you have the update here, multi-time frame divergence, or just watch the email because I sent the email. So just watch out. All right, so let's begin. All right, Costas, well done, very good. You're also in the CAD-yen, awesome, or Kiwi-yen, beautiful. I'll cover that, I'll explain that. That's basically based on the principle, so it's all good. All right, so let's begin, guys. First of all, quick update about the trades that we have been talking about, and we got paid. Again, when the market is moving, we finally can see the fruits of the patience we had on the last several weeks in a row when it was not moving, and we were waiting for the synchronization between the time frames. We finally get it. We get the market paying and moving. So the idea was continue the sells. We finally got that paying right at that moment with this double top divergence and this kind of trendline breakout, or false, not false, like convergence principle and the low continuation. However, the way I see that, it is soon and soon doesn't mean necessarily today. Soon means on the coming days. It starts to be kind of a panic right now. So on the coming days, I definitely see that starting making some kind of fighting back. The bulls will start to fight this zone. We have one amazing clearance area of the most recent stop losses zone right here. This is the low of protection, and it's been clearing right now. So we have the cycles coming and reaching to a beautiful magnet zone, of the two cycles, you see that we are approaching towards, and it is where we will start to face corrections. Okay, the world becomes to be in ultra sells, ultra short on these pairs, and it's exactly the time when you need to say, oh, it starts to smell fishy. And basically what is happening is all the cycles from the daily, as you saw, 4 hour starts to be kind of a cycle by itself on this place and in this place. Divergence starts to appear, so we should start soon and get to make some false breaks, trying to make some kind of patterns that will make the attempt to make some kind of reversals. Okay, these kind of things, maybe one, maybe two, but this basically is a place where new lows after rally, new lows to be created are actually a buy opportunity. And remember the principle of the distance. What we have here is, if that would be the false break, the next one could be on the same pretty much distance, right? So pay attention to that. It's basically the place where on the coming period, it's not about just sell rallies, but new lows with same distance could provide immediate bounces. So start to pay attention, guys. That's 113 and lower. It's impossible to put here a finger on specific level, since we are talking here about you know, higher time frame cycles, right? But this is the place, this is the time, this is the conditions, and that's basically a panic. The world is in a panic, and basically, you know, when everyone is in panic, it's time to consider to be exactly in the opposite direction. Now, don't just jump in, wait for things to happen, let it make it for you, and then go and make your attack. So the euro dollar, and for all those of you who are in sales, like we planned this week, make your money. Isn't that about it, right? Trading is about making money. Make your money. Cash it out, get your money, partial cash out, full cash out, as you wish, as you prefer. It's your money, right? But make it. Don't be there after that saying, oh, I get the money when the market give it to you, and you get basically the risk reward that you want. So that's for the euro. Pound dollar as well, approaching, well, the level we have been waiting for a while, the same 127 we have been talking about a long time. So this is the place, and this is the level. We are dancing around. This is the next cycle, providing the 161.8 on the same zone. Boom, right? So we have it one here. The next one, if this one doesn't fight, the next critical one is the surrounding of 122, 123, right here. We should get the buyers coming in very, very soon. What do we start to see on the 4-hour chart? Attempts. Well, basically, look at that. The last two candles in the rally broken. Well, it's not clearly seen with my drawing, but it's right here. Now the attempt is to make a new low, possibly a false break, maybe one more, but this is the place where we should start and see the reversals. So my personal view for all those of you who are riding the selling machine period, right? It's crazy sell. We are in an amazing place to make the cash out, at least partial, because we still have a level possibly going towards 122, 123, so at least partial. If we face this reversal, that's basically exactly like with the euro, a place where every new low could actually provide some kind of stoppage and reversals. Okay, So attention to that, and money in the pocket. Next one, the dollar yen was bearish for us, still remains bearish. We wanted to make sure we don't have any breakout about new highs. We don't have any new highs yet created there. So, well, we do have this place, but as you can see right here, right? But the thing here is that this convergence did not come after the divergence. Therefore, it has no meaning. So our plan was and remains the sells. We got that basically making the rally 4-hour chart correction. We get here a bearish hidden divergence right on that place. Well, this is close to zero low, so that's our hidden divergence. And the 1-hour chart is the one that provided the two waves here and the breakout. Now all the yens are basically the same in that situation. Costas, fake trendline breakouts for buys where? Where? And where is that? Where is that? Where is that? And all of them are the same, and all of them are paying. CAD-yen we also were to sells. We got the bearish divergence, bearish hidden, and we got a 1-hour chart making the two waves for us. Now here I want to explain something very, very important. Which one, guys, do you think is a correct trend line? This would be number 1. This would be number 2. Which one do you think is correct? Number 1 or number 2? All right. So we have 1, we have 2, we have 2. That was the idea of the question, to make you think. Okay, so number 2 is the logical answer and the immediate answer popping to our mind. Like, oh, of course it's number 2. That's the last 2 lows, right? But the answer is number 1. And the reason for that is because this is not a low. Why? It doesn't have 2 candles rule applied. The 2 candles rule applied means the last rally, check the last 2 candles, created higher highs, higher lows. That's the last 2 candles. Whenever got this broken, this is not a low. Therefore, trend line number 2 cannot be correct. Trend line number 1 is. And we have this low and this low basically giving us the rally towards. Okay, so that's the trend line of this rally, and this is the breakout. If you have confusions in such situation, always remember the principle of what we call step trading. Step trading means you got a high, you got a low, you got a high, you got a breakout. You got a high, you got a low, you got a high. If the 2 candles are applied, of course, you got a high, you got a breakout. Boom. That's your place. Now, as I mentioned before, James shared on the morning beautiful stuff here. This is exactly the webinar yesterday of triple time frame combination. The daily divergence, the last daily divergence, is bearish. Not just that, it's also bearish convergence. The 4-hour chart last divergence is bearish hidden. And the 1-hour chart is bearish by itself. Sorry, from here. This is the place where you want to trade. Triple cycle confirmation. Until when your sell is valid on the short view, at least for first take profit, until you get opposite sign. Is that opposite sign? Yes, it is. It's a bullish hidden divergence. How the bullish hidden divergence is confirmed? By a lower time frame to have a divergence by itself. Does the lower time frame have divergence by itself? The answer is no. So you are still free to go. You have at least one-to-one risk reward in this beautiful situation, or even more. That's a place to make money. Partial, full, or at least stop loss to break even, that's according to your management. But that's exactly what it is about. Now, it's not only divergences, because remember, if I hope you had the chance to watch my weekly, on Monday, the weekly trading plan, our idea is bearish here due to the weekly and daily cycles. So when the cycles fit in with divergence, we have a candy. And candy is most likely something we all love, right? So Mr. Market give us a candy, we can't not take it. We just take it and we say, thank you, Mr. Market. And remember, guys, synchronizations. When you have few time frames, at least two, ideally three, rhymed in the same directions, without obstacles from any of them. Because in most of the time in the market, you don't have synchronizations. One time frame say buy, one time frame say sell, the other time frame say go to the beach. When you time frame saying you the same thing exactly, that's your place to trade. That's your place to make money. What are the obstacles? First of all, divergences against, opposite divergences. So if you are in sell, bullish divergence is an obstacle. Cycle level is an obstacle. So for example, if you would have here some kind of, not like this, double cycle forming, for example, that's an obstacle. Okay? When it's free road without any of them, that's your time to make the money. Okay, and as explained yesterday in the webinar, guys, please watch it. Please find the time to watch that. It could be any kind of combination. If you want to scalp, and I know you will do that anyway, most of you, so do that correctly with the correct time frames. If you want the medium term trading, which is for the majority, that's daily, 4 hour, 1 hour. It still has more than enough opportunities during the week, still more than enough. And for those of you who are like me, that love the longer view, it's weekly, daily, 4 hour. That's the trio. And the signs you watch against for you, for at least for moving to break even, is on the entry time frame. So your entry time frame is your management time frame for the first action. If you have a free road to go, like for a big fish, for example, then you would go with one higher time frame. Okay, but the management begins from the entry time frame. Why? Because that's where you entered. That was your entry reason. That will be your management reason. Okay. Good. It's not. Remember, when you start to drive on your Toyota or your Mercedes, you don't go and put fuel after that in your Hyundai. Right? You put the fuel back to the one you start to drive with. Same here. You start here. You make your management according. All right, so that's for the yen pairs. New Zealandian yen was exactly the same. I'm not going to dig deeper here and cover here the rest. New Zealandian yen bearish has no divergence on the daily bullish one, so it's free road. 4 hour became bearish hidden, and that was the classic place for us to go to 1 hour chart and make sure they fit. 1 hour chart has double wave, bearish divergence, and a breakout. That happens, boom, voila, we have the sign. 1 to 1 at least to break even. Just keep in mind this double bottom and this possible divergence to 4. That might be your place for partial cash out, for full cash out, everyone with his or her own management and trading plan, but this is at least the place for stop loss to break even, at least. Remember that, guys, okay? So we can keep going and going over all the yens. It doesn't make sense, so we will not do that. Let's continue to the next ones. We have the dollar Canadian, which we expected to go for bullish run. As explained on Monday, we got here a bullish hidden divergence on a trend line. What do we do in that case? We drop to the 1 hour chart. We make sure that the 1 hour chart is a divergence by itself and a cycle by itself. And the 1 hour chart is. And here is the entry. This is the confirmation, divergence by itself. That's what we call boys oh boys or girls, right? Or boom voila. This is the buy place for us, or at least the place to start looking for buys. Now I have a question for you here, guys. Don't think I'm just showing you here to anything without questions. Everything comes with a price. So if this is our entry, what would be our stop loss? Low number 1 or low number 2? What do you think is the correct stop loss? 1 or 2? Wow. Everyone says 1. Why? No, I'm just joking. Everyone says 2, and this is the correct answer. Why? Simply because we don't have any 2 candles rule applied here, so 1 cannot be relevant. So this is the low, this is the entry, right? This is the stop loss place for us. 1-to-1 risk reward at least. We move stop loss to break even, and from there we are free to go. Do we have any obstacles currently on the 1-hour chart? Possible moving average divergence. Possible because it's not yet triggered to the downside. 4-hour chart, possible divergence, but we don't have any high formed yet. Daily is a free road to go because the last divergence on the daily that was activated was the bullish one right here, fitting in the cycle which we expect. Just want to remind you, 161.8. Now, speaking of the dollar CAD, I cannot ignore the oil and our plan for sells. Oil provided here the bearish hidden divergence. 1-hour chart did not provide any classical divergence by itself, but the 1-hour chart provided for us a range pattern. It's called a megaphone or inverted triangle, if you prefer to call it this way. And that was the place, of course, that right on the top, fitting in with everything there. We need to go to lower time frame, make sure there is divergence here. If this is our range pattern, the lower time frame must be a cycle here, and that would be the sell. Yeah, wider and wider. So the oil is basically about to complete these 2 legs. As for now, free to go. It doesn't have any obstacles, divergences against formed. They are potential. They never formed. We never had tick to the upside. We never had any false break yet on none of the time frames. Therefore, it's still bearish. And the gold also reached the level we expected to see on the short term. Just to remind you guys, we were on the previous week, we were looking for possible buys. This week we switched to sells for the reason it was ranging and not managing to break the last 2 candles. That's a sign of weakness, and we got the breakout. Reached the 1180 area, which from my point of view is the place to cash out. The way I see that, this is the place to make the money. Oh yes, it has technically a room forward, but it doesn't. Well, I would cash out. I cash out here any shorts, and it doesn't mean going for buys, but it means making the money in the pocket. I think fight should happen here. Yes, theoretically we can still see that going towards 1100. That's the full extension in case it will switch to be a special cycle. That's a possibility. But at that place, with a cycle extension, while each of the cycle legs is a cycle by itself, it's time to make the money. That's my personal view. So for all those of you who are short, this is at least place to break even. Then I saw yesterday your shorts. It was perfect match in that, right? So well done for that. And time to make money, at least partial, or at least move stop loss to break even. Extremely important. Now let me just check. Okay. What else on my update list? Oh, silver. We start the investment journey because of these 2 cycles that we have. So the investment journey begins here and here. Again, it's on the bottom of weekly range. Lower level is basically 13 something. That's the place for next attachment. And again, on the next several weeks, we would expect the movement to find the lows and start the reversal. So for me personally, investment began. So that's the update basically which we have for today. Now I want to go over one very important thing, guys. Euro Aussie. I've been asked a lot about that yesterday. If we are sell based on the weekly, right? Based on the weekly, we are for sell. That was a range for us and a triple cycle. So we are for sell. We expect two waves or a range correction. Now, that's the idea. Daily must fit in the weekly in order to be a sell. Previous week or previous few weeks, we were after sell the rallies because we got a bearish hidden divergence on a daily. And after a fight of a range, we finally got the move. It wasn't too impressive, but it was still a bearish move until the moment we got a bullish hidden divergence right here. If it's a bullish hidden divergence for our chart, must be a corrective cycle. Corrective cycle could be in two ways. Two waves or a range. Do we have a range here? Hidden is irrelevant because 4 hour must be corrective cycle. Well, it could finish with a hidden. Yes, it could finish with a hidden, but hidden by itself with one leg is irrelevant. Okay. Oh, on daily, yes, it is. You can check, but it is. So 4 hour must be a cycle by itself, corrective cycle, which means double wave or a range, any kind of a range. So and here comes my question, is the 4 hour two waves correction, yes or no? Michael asking if 4 hour is a cycle, does two candles apply? Always. Always, always, always. Two candles must be applied everywhere, in every cycle, in every divergence, in every false break, in every convergence, everywhere. It's a great filter on validation. It's a great filter. Okay, so the answer is no, and very well done for all those of you who said no. And the reason is this looks like the most possible two waves, but in that case we don't have divergence between these highs. There is one higher here. It looks like a head and shoulders on the MACD, right? Then it looks like your dragons, right? Right here, or ghosts, or how do you name them? So we don't have two waves on the 4 hour chart. This is not valid. We have the divergence, we don't have two candles. So the answer is we do not have two waves just yet. Is that clear, guys? Very, very simple. Now, let's admit it, the 1 hour chart looks like, but Vlad, look at the 1 hour chart, look at this trend line, look at this divergence. Can't we sell there? My view is always the same. Well, yes, technically you can aggressively, because yes, you still have weekly and daily bearish, right? That's correct, the idea, but 1 hour chart should be relevant and valid once the 4 hour chart has the road free for you. Once it does, boom. If it's not, stay safe. And this is exactly what you will face when you don't have the synchronization. Now you see the difference between CAD yen, Kiwi yen, dollar yen, and many other pairs we talked about, and this. When you have free road to go, that's where things tend to happen. When you start to see different signs, and 4-hour chart has no signs, that's what you will face in the 1-hour chart. So we can say here, but Vlad, 1-hour chart is a cycle by itself. It's triple, and this is a false break with convergence. Why not? My point of view here is always the same. You want to trade safer, the synchronization. You want to trade more aggressive, use yourself double confirmation. So you got a convergence, no problem. Wait for bearish hidden divergence. You got a bearish hidden divergence, no problem. Start looking for your trades. But short term. Why short term? Because still the 4-hour chart has no agreement with you. And who said this cannot turn to be triple, double, and one more? Why wouldn't that be a move on the 4-hour chart that would be like that? 1, 2, and then sell. Right? And that's why if you ignore the 4-hour and you just go with the 1-hour, then at least make it correct, aggressive, and short term. Do you see this? The roadmap, guys, do you understand what I'm saying here? Or do I sound like completely crazy guy? Okay, so that's the idea of the roadmap. Don't skip. If you do, always remember at least 2 time frames to be with you. If you have the 3, you have free road. If you have 2 only, no problem. Make it double confirmation and short term. That's all. Okay, 4-hour is not clear. So that's basically where it comes from. Okay, makes sense? So that's for the Euro Aussie. Another something which I got questioned a lot about. Personally, I think I might be wrong, and the market might not agree with me, but I think we are going for something like that before the continuation. My personal view, once again, I might be completely wrong here, but as you know, as always, I prefer to be wrong and miss than wrong and than right and regret. That's my personal view. All right, so any other pairs you would like me to cover, guys? If yes, please let me know. Pairs to pay attention to for possible reversals soon. The CAD pairs, the Euro CAD, which reached our levels we were waiting for. Time to look for the reversal signs, false break, higher highs, or 3 waves up, 2 waves down breakout. Pound CAD, same story. We have an order slightly lower, but that's for invest. I suspect it still might do that, but we follow up what's happening. We need false breaks, higher highs, convergence. Okay, that's the idea. Kiwi CAD, which also has that duplication. Okay, we have a beautiful magnet here, so time to look for lower time frame and make sure they are with us. Okay, we need false breaks, higher highs, right? At least one false break and higher high, at least, and then we still require like a confirmation sign, right? Double confirmation. Could we go aggressively here with a false break? Well, yes, for one reason, because it's now forming for you the second false break. That's the second, that's the first. My problem with the first is that there is no divergence between the lows, right? This is the place. So it's basically acting as a fake convergence, and that's what makes it very aggressive. I would still prefer to see 2 false breaks, or at least 1 false break, higher highs, and then double confirmation. My personal preference for that kind of things. Anything else, guys? Indices. Okay, sure. But before I go to indices, anything from the forex zone or? Fran, I don't know if the euro will be this place or not. I don't know, really. I'm not Nostradamus. I'm Vladstradamus. No, just joking. It's it's impossible to say yes or no. Currently, we have no reversal signs. It makes sense it's going to fight it around these levels for the reason of the cycles. But if we don't have the fallback and divergence is completing, as for now, it is still under bearish pressure. Personally, I don't think this is the low. I think we still will have lower lows. Personally. But let's see. That's why I'm saying when you start to reach the cycles, when you start to have divergence from different time frames, at least partial cash out, because it could suddenly make something like that, right? That's possible. You don't want to find yourself saying, oh, why didn't I cash out? When you start to see the signs against you, don't try to be smarter than the market. At least break even yourself. Okay, that's the idea. You are very welcome. Okay, so indices. Oh no, sorry. We have another question there. New Zealand above. I don't see New Zealand again. Well, but we also covered the New Zealand yen before. I explained the Kiwi yen before. It was explained. Okay, pound yen. Well, pound yen is also bearish, but as I said on Monday, I expect new lows to be the reversal pattern, but because of the same reason. Because of the same reason, just this. We are there, so we should start to face some kind of lows with false breaks as close as it gets in this zone, and it's there. How low can it continue from here? It can continue to make some few lows, exactly like euro, exactly like the pound dollar, 1-to-1. Do we have the buy reasons as for now? No, we don't. We had it at the beginning of the week, right here. 1, 2. We got this 1, 2. We got a bearish hidden divergence. The 1 hour chart was the 1, 2. Yeah. So this. That's the 1, 2. Okay. All right. So when it's formed, when you have it, Costas, when divergence formed is when you have a tick. MACD change direction. That's formed. Or false breaks on lower time frame. That's formed. Indices. German DAX going crazy, but crazy good, I think, in that place. We remain bearish. I have no changing plans here. The weekly, daily still synchronized. We have possible fall on this cycle, at the same time possibility for full duplication all the way to the bottom of the range. So honestly, I wouldn't rush to get out here. It looks good. It looks healthy. It looks bearish. Nasdaq, which holds as for now a double top with a divergence, maybe soon making the breakout. We still want to see the breakout and lower lows, right? That would be the classical conditions. It's not there yet, so we are for short-term sales and more aggressively, but it's bearish for us. Our plan was and remains sell. Italy, bearish, 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 unchanged. It was and remains our plan. Sell the rallies for us. S&P not on my list then, but S&P basically I think like the New Zealand, like the Nasdaq. Once we get a false break, which we did, we need the lower lows, which we don't yet have. If we do, I think it's classical sell setup. I think it's classical sell setup. So waiting for that to happen. But aggressively, you have trend line broken, and this is a triple cycle, so it should maintain the bearish pressure. Too many things going on right now with the trading war: Trump, Turkey, Europe, China, Canada, Saudi Arabia, and so on. It's everywhere. It's warming up, loading, and we see the impact. We see the impact. Okay. So that's all, guys. That's basically the updates as we have them. So far, the week is amazing, and it's Wednesday now. Little tip for all those of you who have wonderful run this week: don't try to be over greedy and look for more and more and more and more opportunities during the week. Whatever you have running, make your money. Let partial runs. It's too easy to ruin a good week than to make it better, right? So when you have the opportunity to run free, if you have a good week and you have the opportunity for some trades, partial or fully, run free with stop loss to break even, go with them. But don't try to overexpose yourself to other opportunities just because they also look okay. It's too easy to ruin a wonderful week, and it will be pretty pity, right? Greed is not a good thing for traders. And once again, guys, when you have the time, if you still didn't, please watch yesterday's webinar. I believe this understanding of the trio cycle confirmation and the roadmap between the three time frames should make sense to you, should help you at least to be able to spot your trading places correctly. And remember, it's very simple. When you have three time frames confirmation, a free road in the money flow, this is identifying the money flow, that's when you will want to apply your strategies. Any strategy you work with, any system you work with, that would be the time. So what we saw yesterday and what we see here in the live rooms day by day is we prepare the trading conditions. Once they approved, this is your time to apply any system you work with. Once the market money flow approved, and we do that with the cycles and the divergences. Okay, remember that it's very important, and that's the real roadmap. Thank you very much, guys, for being here. Tomorrow I will not be around, as you know. Once again, thank you for your great wishes in advance. And I wish you a great continuation, successful continuation for the week. By the way, it's just last thing, guys. The competition, traders competition, continues. We still have 1.5 months forward. For all those of you who are not in the competition yet, it's free for you. So jump inside, go to the members area. On the lowest tab is traders competition. Sign in, it's free, and it's for you to boost up your trading. Don't miss that, guys. Okay, that's for you. Once again, thanks for being here. Enjoy your day. Ciao.